So I'm back. So I want to talk about mortgage versus renting, which one is better and why I'm leaning towards being a renter is better than having a mortgage. I know that it's unpopular. That's why I'm making this video. Most people want to own a home, and we brought up, oh, get own a home, and you need to own your home and stop being a renter, and you just give me your landlord money, blah, blah, blah. But it's much more deeper into that because when I was looking at buying my first home, I really sat back and thought about everything. And then I'm like, and then once I actually did buy the home, it's like living wise, I was better off renting, which I'm gonna get into. But before I break it down, I want to start this video off saying that if you could buy your home outright, let's just file a disclaimer now. Obviously, that's the best choice. If you can afford to pay for your car cash, just like anything, it's better to do it that way. But we know that 95% of people can't afford to pay for a house cash, hundreds of thousands of dollars. So you have to be in the top like 1 to 5% of people, earners. So we know that most people not able to do that. Most people is either renting. I think it's safe to say that 90 to 95% of people is either renting or have a mortgage, one or the other. So I just want to stick on that because, of course, if you could buy your home outright, then of course do that, obviously. But we're gonna talk about this renting versus mortgage. So typically most mortgages are 15 to 30 years. We know Trump is talking about 50-year mortgages now. I just seen, which is crazy within itself. That is crazy. But yeah, typically it's 15. Most people I believe have a 30-year mortgage. Most leases is like 1 to 2 years, then you have to renew it. So let's look at the advantages and disadvantages. Some we already know, but let's go over it. So the advantages to renting is that it's more flexible. Obviously, you're not tied down for 15 or 30 years because when it comes to a mortgage, it's always like, do you really want to stay in the same house in the same state for 15, 30 years? I know back in the day, that was the thing to do. People didn't move around like they do now. It wasn't so much like airplanes and so much stuff to get around like it is now, thanks to technology, and you can just up and move and find the job. Now with the internet, you can apply for jobs in other states. Like it's more easier to move around than it was back then. So most people was more comfortable being locked in to their home. Most people didn't even leave their neighborhood. And we know it's still like that to this day, but it was way worse back in the day. So that's the thing that it gives you more flexibility because what if you don't want to stay in this home 5 years from now? Or what if like you end up having more kids or your kids end up leaving and you don't need all of that space? There's so much, you get way more flexibility when it comes to renting. Two, when it comes to renting is that uh I mean the biggest one, we might as well get this out the way. The main reason why I lean towards renting over having a mortgage is simply the simple fact of you have to pay for repairs that's going to happen. And I say this because my mom recently just bought a home because she was one of the people, she always wanted to own a home. She was determined on, owning a home. That's all she used to talk about when, growing up and stuff like that. So she always wanted to own her home. She think it's dumb being a renter. But what I had to tell her, she had to go through a course or whatever about, on home ownership. And the main thing they tell you is that you shouldn't be owning a home or just trying to get a home if you don't have no savings, if you don't have no money saved. Seriously, because when renting, that is the one thing about renting. Because with me renting before I'd have my furnace go out, that was 1,800 my landlord had to pay. He was heated about that. It was a leak in the home, like the hot water tank was leaking. So that was, I think he paid like 800 for that. And then the thing about this is that it's an emergency. So like if you live in a cold state like I do in Michigan and your furnace go out, you got to get that fixed ASAP. So it's not no time to, oh, I'm gonna save up, like I'm gonna save up and do it. Like, no, you need this money now. The same for if you got a leak, because my water bill was like double or triple what it usually was. It's starting to be. That's how I noticed that it was a leak. I'm like, why is my water bill like double what it is? So I called the water department. They're like, yeah, you probably got a leak. So yeah, lo and behold, so he had to hurry to get that fixed because they were just gonna keep making the water bill go up and be, more than what I was willing to pay. Like I told him, I ain't signed up to pay for no water bill for a mansion. That's what it was. I'm like, this is what a water bill would look like if I lived in a mansion for real. So, no, definitely not. So, and then the number one thing is the roof. Like when you move into homes, like I told my mom, is that some people trick you, like they'll sell their home because you don't know if the roof is leaking until it's raining or raining even real hard. So you don't know if you went to go see this house on a sunny day that the roof is leaking. So then we know that roofs is one of the most expensive jobs that there is. So we talking about, I done heard quotes from 15 to 25 to 30,000. So think about that. Like, do you got that much money saved? You see what I'm saying? So that is one of the main things with rent is that it's still your landlord house. So if anything happen, repairs and all of that stuff, you save a lot of money on repairs renting versus if you own something, you gonna have to come up out of that. So that's why I always say that you shouldn't be owning a home unless you got some money saved, unless like you shouldn't just be trying to, you living paycheck to paycheck and don't have no savings but trying to own a home. Like that don't make sense to me. Then you know that, well, we're renting a home too, because when like if you rent a house, a lot of times you responsible for all of the bills. Like you gotta pay for the heat, the electric, and the water bill, just like if you owned a home. So it's more so favor if you in an apartment. Like I know a lot of apartments got the heat included in the rent, and then you might not have to pay the water bill. Because I don't think I paid the water bill when I was last living in an apartment. So you can kind of save that way also. Now, next, when it comes to renting, now, which one is cheaper varies because I know some people that's paying more for a mortgage than people paying in rent, and vice versa. It really depend on your credit. We know how much you put down. Um, what else? And then, of course, how expensive both homes is. It's a lot of variables to determine if you're gonna be paying more or less. But you know what? Owning a home, you know that property tax that a lot of homeowners that got a mortgage complain about all the time, that property tax that go up. Then you gotta have homeowners insurance. So, it can kind of vary, but I have seen that renting actually has been, it's usually cheaper most of the time, but like I said, it kind of varies for real. What else about renting? So getting into mortgage. So the advantages of mortgage over renting is obviously it's really only one thing in that, but it's a big thing though, and that's that you get equity in your home. So after a couple years or you fix the home up and stuff like that, you could take out equity in your home and use it to buy another home or to do, fix up the house or do other things. It's the benefit that most people say for having a mortgage is that over time you do get some money in that home that you can use to take out to do other things. So it's kind of like you building money along the way. Another thing about mortgage is that I mean, see, the problem is that most people not able to pay off their mortgage. Most people default or have to take out a second mortgage because that's the thing. Like I said, when you locked into something for 15 to 30 years, you don't know what's going to happen. You don't know uh if you're gonna lose your job, like if you're gonna get a divorce, cause maybe y'all's looking at both of your income. Like there's so much that can happen in 15 to 30 years that it's hard to just be able to commit to that. So that's would be the problem with a lot of people always have to take out a second mortgage or something like that because they fell behind on payments or whatever. So That's the big thing. But if you are able to make your payments and pay it off on time, you do have something that you can leave down to your children. Like my neighbor who dad passed away and left the house to him, paid off. All he got to do is pay the property tax every year. So if you do it, like it might not be for you, but you will have something to pass down to your kids. Technically when they grown, you will have a house that you can keep in the family, so on and so on. So of course that is definitely a big advantage. And then it's a whole nother thing, but to me the best thing, I would only be trying to get a mortgage, or my main thing is all about passive income. So I would be trying to, like I said, take the, get a mortgage, get a home, take equity out or whatever, and then buy another home and then rent that out, and start making passive income and maybe get a duplex or something, or maybe make like a lot of people do, make my first home a duplex or a two-family flat. And then, I live on one side, then I basically have somebody paying my mortgage or whatever. That's what a lot of landlords do. They rent out homes to pay for their mortgage. So that's always a factor. Like if we talking about a business side of it, but we just talking about living, if we just talking about not doing that and renting out the homes, we talking about strictly living, then that, of course that's something different. And I again lean more towards the rent. So because also, of course, with rent you can get evicted, obviously, and you have to go to the court and stuff. Then with a mortgage, they could take your home. It is harder for them to take your home then a lot of people make it seem, because I got a neighbor, same thing, because since he a felon, he got a dad house. He ain't been able to pay property tax in like 3, 4 years, and they kept on like working with him, and he kept on kicking the can down. So it's not like they say like, oh, if you miss your property tax or you miss like three mortgage payments, they automatically gonna take your home. Well, no, my bad. It is different because he don't have a mortgage. He just have to pay property tax. So maybe it's with the state you can kind of work out with their property taxes and pay them over time. Now, if you fall behind on your mortgage payments, I don't know how quick they get you out. Let me pull it up, because I actually just now thinking about this on the fly. I was already looking at rent versus mortgage. How soon can bank take your home if fall behind on mortgage? A bank typically can't take your home immediately. The foreclosure process usually begins after you are 90 to 120 days behind on payments and can take several months to a few years to complete, depending on the state laws and housing market. The lender will first send a notice of a default or acceleration, which starts the official process, but you still have a period to resolve the missed payments before foreclosure is final. Oh, a payment is considered late after the grace period of 15 days. Late fees is assessed. 30 days it'll be reported to the credit bureau. 90 days, many lenders will send a notice to accelerate or a notice of default, which is more serious warning that you must bring the account current to avoid foreclosure proceedings. 120 days, this is often the point when the legal foreclosure process officially begins, as many lenders are required to wait this long before starting legal action. So, you got a good 4 months. But then, like I said, the process just begins then, being put for 4 weeks. So the entire process, I'll say you got a good, in between a good 4 and 7 months before they can put you out your home if you fall behind on your mortgage. Now for renting, also can the landlord evict you? In Michigan, the landlord can start the eviction process as little as 7 days for non-payment. After providing 7-day notice to pay or quit for other lease violations or for ending a month-to-month tenancy, landlords typically provide 30-day notice. If the tenant does not comply, the landlord must then file a court case to proceed with eviction. So they can start it as soon as 7 days, but typically everybody know you get that 30 days, and then which typically gets the tenant fee more around 10 before. So yeah, I actually been through the eviction process in my first apartment when I was young, not being able to pay bills and being responsible. So yeah, it's like you get your 30 days, and then after that you get 10 days before the sheriff can come to your house. So you really get like a month and a half, and it all depends on how far your landlord lets you get far behind, because like they said, they can't do it, but as far as 7 days, we know most landlords wait like maybe 2 months, 2 to 3 months, depending on how serious your landlord is. But we know the most landlords don't try to evict you when you 1 month behind, but we'll say like 2 or 3 months behind. So let's say two, then they have to give you the 30 days. So about 3.5 months you get before you put out, versus with the mortgage, it's like 4 to 7 months. So you get a couple more months with a mortgage if you end up falling behind. So, so yeah, that's also something to think about when it comes to rent versus mortgage. Obviously, like, dang, I clicked off of it. I should have went back. So, so these is the pros and cons AI say. So renting, there's lower upfront costs, requires a security deposit in first and last month rent, much less than a down payment and closing costs, of course, because security deposit in that first month rent, that's ridiculous. Like the price be ridiculous, but it still be reasonable. Depending on where you at, it's typically like 2,500 to 4,000, something like that. Then we know with the closing costs for homes, it's like, they want you to put down a certain percentage and everything. So it'd be really in between 5,000 and up. And 5,000 is the least. Usually it'd be like 8 to 10,000 that you need for everything to get your home. If not more, like I said. Flexibility and mobility, easier to move for a job and stuff. So I said that one. So this says that landlords can increase the rent year to year and go up on you, which my mortgage not supposed to go up, but I have. So you kind of more locked in with your mortgage. I'm not sure. I think property tax can go up year by year though. Well, yeah. What am I talking about? Yeah. Yeah. So, you have to think about that. The property tax kind of evens that out. No maintenance responsibility. So, of course, I already broke that down. That's a huge one. You don't have to worry about major repairs, less control and freedom. So we know with owning or having a mortgage, you can paint the walls, own pets, even though you can do that when you rent, but not all of the time. Add on to stuff, build a debt, like it's more stuff that you can do to the home. Rent is fixed for the lease duration, making budgeting straightforward. The landlord could sell the property, requiring you to find a new home. So that rarely happens, but I have heard that happen where the landlord sell the home and then tell you got to get out in 30 days because he want to sell it. That rarely happens, but it can happen. So it says getting a mortgage. Each mortgage payment increases your ownership stake, a key wealth building tool. So I broke that down. You get equity in the home. High upfront cost. So requires a large down payment in between 3 and 20% in closing costs. Stability and control gives you roots in the community and the freedom to customize your home. You responsible for all maintenance is the con, like I said. Potential tax benefits. Homeowners may deduct mortgage interest and property tax from their taxable income. Less flexibility. Selling a house is time consuming and expensive. Realtor fees, etc., making relocation more difficult. Fixed monthly payment. A fixed rate mortgage ensures stable principal and interest payments for life of the loan, typically 30 years. Exposure to market risk. The home's value could decrease in a market downturn and impacting your investment. So they say if you plan to stay in one place for less than 3 to 5 years, rent is more better. Um, Home ownership requires a stable income emergency fund for unexpected repairs, like I said before. Rent is better for those prioritizing mobility in a hands-off living situation, while buying suits those seeking stability and the freedom to personalize their space. In major metro areas, the total monthly cost of owning, including taxes, insurance, and maintenance, is higher than rent. So, yes, so it does cost more for a mortgage than the rent overall. Like your mortgage payments might be cheaper, but with property tax and everything else, it ends up being more. So that's my thought on renting versus a mortgage. It's always a big debate. It's all about what's right for you. If you just starting off, and of course, like you should become a renter. If you don't have no savings or you don't have no money saved up, you should be renting. If you somebody who like to move or don't know if you gonna stay in this one place for a long time, you should rent. If you somebody who thinking long term or got a plan on buying more homes and getting into real estate and things like that, you should get a mortgage. If you somebody who wants to customize your home, like a lot of people like decorating and might want to, like I said, build the deck, paint the walls, and really do a lot of stuff to the home, you should get a mortgage. And then if you somebody like they like on the opposite side, if you got stable income, your money straight, you got an emergency fund and everything, you should be straight to get a mortgage. So it really depends on the person. I still lean more towards renting versus like I look at owning a home more so as an investment, more so as like if I'm getting into real estate and trying to make passive income in the long run. Now I don't have kids either, so I'm somebody a single person, so I might up and want to move, which I've been thinking about to a warmer state and things like that. Like I'm a lot more flexible versus if I have kids. If you have kids and a wife and everything like that, and you want to keep your kids in the same school system, kids do play a lot of role because kids make you less likely to want to move and be able to take chances and adventures for real. Because with a kid, you want them to be stable. You don't want your kids moving all of the time and having to switch schools all of the time. We know that that's not good for the kids. So a lot of stuff to consider. So I just wanted to make this video and give my thoughts on it. I'm out.